Good evening, students. Welcome to the session. I hope you are doing well and you have started studying because we are, almost on the verge of finishing your syllabus. So I hope you have already started going through your syllabus in detail. You have started, looking at all the possibilities, all the questions. So my request would be that, since this last, so my request would be that you study direct taxes, of course, all of the subject, but at least direct tax paper so that you can get, the exemption even if it comes in and gets passed as act, it would be a change, although the principles are more or less remaining the same under the new bill also, but you will have to remember all the section numbers once again. So that will cause a lot of difficulty because all this while, since your IPCC, you have been remembering the section numbers of the Income Tax Act 1961. And now all of a sudden you are then asked to remember the new section numbers, which will be a difficulty, right? Although the new income tax bill is supposed to be a simpler version of the current income tax bill. But as I said that, it will involve unlearning the old thing and then again remembering the new one. So with that, we will start with the today's class. So today what we are going to study is the non-resident taxation. So let's start with it. Let me just write on the screen. I hope the screen is visible to all of you. And I want you to even study this topic. It's not something which, is an optional topic or is something, carrying the less weightage. This is very, very important topic, specifically in today's time where we are seeing a lot of issues coming up in international taxation. This topic becomes a very, very important or imperative topic, students, for the reason also not only from the exam perspective this is important, this is also important from the perspective of your future career. If you want to make a career in taxation or for that matter specifically in international taxation, this topic will give you that basic idea about what is going to be the international tax. And students, this is a very lucrative career option as well. Remember this because this is going to be the future. There are a lot of litigation cases, there are a lot of practical nuances which are coming up in the international taxation. Secondly, what is also there as a case is that, the companies are going, the Indian companies are going global. The India has become a very lucrative destination for even the foreign investment which is coming in. And therefore, this topic becomes a lot of important topic for you to understand, because then you will be, in the future knowing that, okay, these are the tax implication on the foreign investment coming in, these are the tax implications which will be there on the Indian investments which are made in the other country. So that's where, this particular area is a very lucrative area from a career standpoint. Good evening, Ginny. Yes, hope you're doing well. Okay, so let's start with it. When I was in my CA final, when this particular topic was introduced to me, I came back to my parents and told them, no, I want to make my career in international taxation. And they were also wondering, what is this about? So, this topic created such an impact to me. And I hope that, I would be able to create the same impact on you so that, you may make the career in this, because as I said, this is a very lucrative option. And therefore, if I'm able to pass on the knowledge that I've gathered during these years on this particular topic, because it's a very close topic to my heart, I think, that would be a best part on my end. So with that, I'll just, quickly start with it. The screen is not visible. Screen visible, eh?
Now visible. Earlier.
Visible? Okay. Okay, perfect. So now what is this non-resident taxation? Is it something that, we have a different taxation for the non-residents? The answer is no. It is very well a part of the Income Tax Act itself, students. So, but, since it's concerning specifically the non-residents, we are studying it as a part of different chapter. Now, students, tell me that, whenever a country wants to tax, right? Whenever a country wants to tax any particular person or any income, it can only tax when that country has a jurisdiction over that particular subject matter. Are you getting my point? See, one cannot tax it, a country basically cannot tax anything if it is not falling within the jurisdiction. Can we tax a person who is a citizen of maybe, let's say, Switzerland or citizen of USA? Can India tax it by any way? The answer is no, right? India cannot for sure. Why? Because why can't India tax? Why India can't tax a person who is not a resident of India? Any idea
Because,
about?
ma'am,
Yes.
the he would liable to tax over that country's as per that country's act or law, because
Yeah.
in the Indian
India
income tax will be applicable to the resident or the person who has incurred any income from India.
right.
To that it will levy.
Yes, that's correct. So see, you are associating the taxation of income, one, with respect to the residency of a person. Secondly, earning the income in India, right? So what you said right now is that a non-resident, a person who is a resident of some other country, can be taxed in India provided he has earned the income in India. Yes, Kirti, right? Kirti, I would request if you can, join the Zoom so you will be able to participate much better through the Zoom. Okay. So basically, what we are talking here about is the jurisdiction to tax. Let's say, for example, any law that we are making, right? Any law, be it criminal, be it civil laws, any law. For example, if a person has committed crime in Europe, can the Indian courts convict that person? The answer is no. Why? Because we don't have a jurisdiction. So any law a country frames, that law a country can frame only when it has a jurisdiction over the subject matter. Same thing comes in tax. Isn't it, students? So therefore, my point here is that even under the tax law, India can tax, or India has a jurisdiction to tax only when it has a nexus. What do we understand by nexus? Nexus means some connecting factor. Some connecting factor. Now, what do we understand by a connecting factor? So, from the taxation perspective, India can tax only when either the nexus is on the basis of residency of that person in India, or source of income is in India. What you just now said it. Are we getting this particular point?
Yes, ma'am.
So, either a country can tax on the basis of having a person who is a resident of India, or secondly, either even if that person is not a resident of India, but that person is deriving some source of income in India. Right? So therefore, on these two bases, we can tax it. Any country in the world. You take up any country in the world, these are the two factors on the basis which we can tax. Are we getting this particular point? Yes or no? Okay. Now, with respect to this nexus, if you compare it even in the GST law, whether exports are taxable, whether exports are taxed under GST, yes.
Ma'am, under GST, the exports are zero rated. They are not taxable.
Yes. So why is it zero rated? Why is it zero rated?
To enhance the export activity in the country.
No. It's not about that. Any other answer? Yes, Katie, it is zero rated, but then why is it not taxed? See, exports are not taxed because what is GST? It's a destination based consumption tax. Have you heard this term?
Yes, ma'am.
Yes, it's a destination based consumption tax. What does that mean? What does it mean, destination based consumption tax? Yes. Any idea? So destination based.
Actually,
Yes.
दिमाग में आ रहा है लेकिन उसके लिए प्रॉपर वर्ड नहीं मिल रहा बताने के
You
लिए.
can attempt, Janice. It's fine. I mean, see, you are all CA students. We understand, and then you can attempt whatever comes to your mind. You can explain in Hindi if you want. You can explain in English if you want. So you can just, say whatever comes to your mind.
क्योंकि ये जो वर्ड है वो अपने आप में ही एक्सप्लेनेटरी है. डेस्टिनेशन based consumption tax, it means when any supplier supply any goods to the recipient and only only then the GST will be levied.
Okay. See, yes, Katie, you are right. So basically, destination-based consumption tax is basically that it will be taxed in the country where the consumption is taking place. Because GST क्या है? GST is basically a tax on the consumer. See, GST levy होता है on the manufacturing, yes. On the retail, yes. But then the burden is being passed on finally to whom? To the one
Yes.
who is consuming it, isn't it?
Yes, ma'am.
Right? So therefore, it's a destination-based consumption tax because what we are trying to do over here is we are trying to say that this will be finally taxed in a country where the consumption is taking place. In the case of exports, the consumption is not being taking place in India. So therefore, it is not being taxed in India and therefore the exports are zero rated. Are we getting this point? So in the case of the imports, if you see, imports पे there is tax. Why? Because the consumption is being done in India. Right? So that is the situation where the exports are zero rated and the imports are taxed. Are we getting this particular point?
Yes, ma'am.
Yeah. So this is the reason where you see, if you see that exports are zero rated, because the India or any country in the world will never have a jurisdiction on the taxation of exports, because the consumption is never done in that country. In all the countries, if you see, wherever there is a law similar to GST, there may be VAT, there may be service tax, whatever you say. In all the countries, the law is going to remain the same. Exports will always be zero rated. For example, if you go to any country in foreign, and when you buy something there, right? So in that particular country, you will see that they will refund you before you leave that country. For example, I go to Switzerland, and then let's say, for example, I buy the chocolates there. Switzerland chocolates are very famous, right? Or I go to Japan and I pick up, certain appliances from there. Now they will refund me the taxes before I leave the country, but provided I have to show that I'm not opening up the box over here. If I open the box in that country, means I'm consuming in that country. Then it's not export. But if I show them my passport and my tickets, and I show them that, look, this box is closed, they will refund me the taxes on the airport. Because the country doesn't have the jurisdiction to tax. So similarly, in the Income Tax Act also, the jurisdiction to tax is determined by the residents and by the source. Are we clear? Yes. Now, what is the residency of a person? How the residency of the person is determined under the Income Tax Act?
Ma'am, please ask again the question.
How is the residency determined under the Income Tax Act?
As per Section 6, ma'am.
As per Section 6, yes. Okay, perfect. How is the residency of individuals determined? What is the criteria for that?
There are conditions.
Yes.
When any person is stay in India for 182 days or more, then he will be or the second condition is if in the preceding 4 years he stays more 365 days or more, then if any one condition gets fulfilled, then he will be considered as resident of India.
Yes, right. So tell me, what is the criteria for different kind of individuals there? Any idea? Have you done Section 6 in detail?
मैम एक्चुअली मैं समझी नहीं डिफरेंट काइंड.
So basically, there are different criteria for the one who is leaving for employment, for the one who is visiting India. Any idea? So have you done Section 6 in detail by any chance?
मैम एक्चुअली रीड किया है इस
Okay.
any person who is going अगर कोई पर्सन क्रू मेंबर की तरह अगर जा रहा है बाहर, तो या फिर एम्प्लॉयमेंट के लिए जा रहा है, तो उसको जो 182 वाला जो क्राइटेरिया है वो अप्लाई होगा, बट जो 365 डेज वाला क्राइटेरिया है वो अप्लाई नहीं होगा अगर वो 182 डेज से कम इंडिया में रहता है, तो वो नॉन रेसिडेंट कंसिडर किया जाएगा.
Correct, yes. So let us look at Section 6 of the Income Tax Act. Residential, yes, Prashant, right. So, yes, Kirti, correct. So, residency is determined under Section 6 of the Income Tax Act, right? First, we are talking about the residential status of the individuals. So under 6(1), an individual is said to be a resident in India in a previous year if he satisfies any of the two conditions. What are the two conditions? So A and B. These I will call it as basic conditions. Right? Now, what is my condition A? Stay in India for greater than equal to 182 days. During the previous year. So stay in India for greater than equal to 182 days during the previous year. Right? That's the condition 1. Or, so this is an or condition. You have to satisfy any of these. Number 1, stay in India for greater than equal to 60 days in the previous year. So this B condition has two clauses and both of them needs to be satisfied. Second is, he has been in India for total period of greater than equal to 365 days during the 4 preceding previous years. So, stay in India for greater than equal to 365 days for 4 preceding previous years. So this will not include the current previous year for which we are testing the condition. Are we clear? So these are the two basic conditions. If you satisfy either condition A or condition B, you become a resident of India. If you fail to satisfy any of the condition, either A or B, you will become a non-resident. So if both the conditions are not satisfied, either A or either B, you will be called as non-resident. Are we clear? Yes or no? Is this particular point clear?
Yes, ma'am.
Okay. So, tell me one thing now. This is talking about the stay in India during the previous year for more than 182 days. Have you done by any chance FEMA law? Yes. Any chance you have done FEMA? Because there also you have a residential status. Any idea?
मैम लिटिल बिट करा है जब वो 2 एडिशनल थे सब्जेक्ट ए और बी मॉड्यूल था उसमें करा था लिटिल बिट.
Okay.
मैं
Got it.
वोकेशनल स्टडीज के लिए बाहर जाता है तो उसमें
Right.
कंडीशंस थे.
Yes. Right. So under the FEMA law also you have residential status requirement very similar. But under that, basically, it is more based on what is your intention to go. So if your intention is to go abroad, you are leaving India for the purpose of employment, business, or visits for unconditional period. So then in that particular case, you become a non-resident the moment you leave India. So there the number of days really do not matter. So that's why I just wanted to highlight. In case you're not if you have not done FEMA, that's still fine. But this is what it is. Okay. So in case you want to compare it with FEMA, there you will see a more intentional based residential status. Here you see the intention is not important. The moment you come to India, from that period, we'll count the number of days. Clear? Now, with respect to these two conditions that we are looking at, in respect of the second condition which is there, where we are seeing that stay in India for more than 60 days or, and for more than 365 days in the 4 preceding previous years. Now in this, there are certain exceptions. So what is the exception? Number 1, this is for the normal individuals. Okay, this is what we have discussed. For any Indian citizen, for an Indian citizen, so I'm talking here about now the exception. The exception number 1. Any Indian citizen who leaves India for the purpose of employment outside India. For them, the condition B which is there is not applicable. So, the exceptions are coming to this. The first exception 1 is condition B is not applicable. That is, consider only 182 days. For an Indian citizen who leaves India for the purpose of employment outside India. Secondly, Indian citizen who is a member of, who leaves India as a member of crew of Indian ship. For them, you will only consider the 60-day rule. You will not consider, you will only consider that if they have stayed in India for more than 182 days during the previous year, only then they will be called as a resident of India. And number 3, Indian citizen or a person of Indian origin who is outside India comes on visit to India. Comes on visit to India. In that case, I will see that whether we have 182 days stay made or not. Now, for this Indian citizen or PIO who is outside India coming on visit to India, his total income from the Indian sources should be less than 15 lakh rupees. So, this person's total income from the Indian sources should be less than rupees 15 lakh. This is only for the category C that I'm talking about. Clear? I'll explain this each one in detail. First of all, tell me, who is a person of Indian origin? Yes, who is a person of Indian origin? Ginny, I don't know about SPOM exam.
Ma'am, SPOM is the same one.
No, that I know, but
Self-paced online module exam, ma'am.
yeah, that I know, but I'm saying I don't know about the time of that.
नहीं, एक्चुअली आपने पूछा था ना फेमा एक्ट किया है, तो मैंने वो आपको आंसर
Okay. Yes. Yes. So, who is a person of Indian origin? What is the difference between an Indian citizen or a person of Indian origin? Yes.
Ma'am, Indian person of Indian origin is a person who is himself born or his parents or grandparents are born in undivided India.
Yes. That's right. So, who is an Indian citizen then? Yes, Prashant, you're right. But who is then? What is the difference between Indian citizen versus person of Indian origin? What is the difference? Why they have written two words in the statute? Yes.
मैम जिसके पास इंडियन पासपोर्ट है वो इंडियन सिटीजन है, एंड जिसके पास जो इंडिया का है लेकिन उसके पास किसी और कंट्री की सिटीजनशिप है तो वो इंडियन फ्रॉम इंडिया ओरिजिन हो जाएगा.
Yes, right. So basically, see, passport, how is it determined? When do you get Indian passport? Are you an Indian citizen? Are all of us Indian citizen?
Yes, ma'am, by birth.
Yes, right, by birth. So since we are born in India, we become Indian citizens. So wherever you take birth, that country's citizenship you will get. Are we getting it?
मैम, यहाँ पे हम जैसा कि अभी इंडियन ओरिजिन की जो डेफिनेशन थी उसके अकॉर्डिंग अगर हम ऐसा भी बोल सकते नहीं इंडियन सिटीजन के लिए, अगर वो हमारा संविधान जब से लागू हुआ 26 जनवरी 1950, आफ्टर दैट for that time we will consider as Indian citizen.
See, Indian citizen is basically a person who is born in India. That's it. It's very simple. So, जिस भी country में you take birth, you become the citizen of that particular country.
Yes,
it is very simple.
Yes, ma'am.
Right? It is not dependent on whether the constitution came into what point in time. So, we can acquire the Indian citizenship by birth or by registration.
Yes, ma'am.
So either when we are born in India, we become Indian citizen at that point of time itself, as per the Indian Citizenship Act, which is there.
तो मैम ऐसा भी कह सकते हैं ना कि all Indian citizens are also the persons of Indian origin.
Yes. So all the Indian citizens are, yes, the person of Indian origin. Yes. But what is the difference between the two is that I am a person of Indian origin if my either lineal ascendants were born in undivided India, like either my parents or grandparents were born in undivided India. So then, let's say for example, let's say my parents are Indian citizens, right? Now they have moved to let's say some different country, let's say US, and now I'm born in US, so I become a US citizen. Also my parents, they cannot become a citizen of two countries. So Indian Citizenship Act does not allow you to become citizens of two countries. If you are becoming citizen of India, you have to surrender the citizenship of other countries. So you can always surrender the citizenship and you can acquire the citizenship of other country by fulfilling certain conditions. Are we getting that? So yes. If, let's say, for example, they have become citizen of US, but whether I'm Indian citizen, the answer is no. Because I'm now a US citizen, I'm born in US, so I have got the citizenship of US by birth. However, I will be a person of Indian origin.
Yes, ma'am.
right? Because my parents were of the Indian origin. Are we
Yes.
getting this particular point?
Yes, ma'am.
So Indian citizenship can be acquired by the birth or by registration. So that is fine. That is a citizenship that I am taking that. So as a citizen, I will be entitled to the constitutional rights which are there and the duties which are there. I will be obliged to that. However, the person of Indian origin is different. So basically, it is something that if my parents or my grandparents were Indian at any point in time. And then residency is what? Residency is basically for the purposes of the taxation and the FEMA regulations. Under FEMA, you have different residency provision, right? Which is based on the intention. So the FEMA law regulates that whether you can have the transaction, what kind of transaction you can have with a non-resident with respect to the foreign exchange that is going outside India. So that is different, right? As far as the Income Tax Act is concerned, the Income Tax Act purpose is to tax the income. And to tax the income, the country can only tax when it will have jurisdiction to tax. Jurisdiction to tax will come through how? Through the residency. So residency is important for that purpose. So are we understanding the difference between the three? Yes, Prashant, dual citizenship is not allowed in it. Are we clear?
Yes, ma'am. Clear.
Okay, perfect. So now coming to this particular exception again. As I said, condition B is not applicable. That is, we will consider only 182 days for the Indian citizen who is going outside India for the purpose of employment. This is for the reason, see, that, whenever you want to go for employment, now you may leave India during mid-year. Let's say I'm joining my US company in the month of October, November. Now, if 60 days condition would have been there, then what happens is usually my income will get taxed in the US also, in India also, right? Because I can be becoming a resident of US also based on whatever the conditions are there in that country. So therefore, they have given a higher period, which is 182 days instead of 60 days for the person who is going outside for employment. But that person should be only an Indian citizen. Your PIO is not there. Second is Indian citizen who leaves India as a member of crew of Indian ship. Again, they have said a member of crew of Indian ship and not the member of crew of a foreign ship. Remember this difference, right? So if I am going for the purpose of employment or I am going for the purpose of the member of crew of Indian ship, then in that particular case, we will consider only 60-day condition. And the third is Indian citizen or the PI who being outside India comes on visit to India. Right? Now, what if students, let's say, for example, I have been outside India for so many years and now I'm coming back, selling all my house, leaving the employment in US. I'm just fed up, I don't want to live in US now. Or, for example, you are seeing these days, Trump is putting up a lot of conditions on giving the US visa. So therefore, I'm now no more eligible. My visa is not getting extended. So I have to come back to India. Will I fall in the third clause? Yes.
नो मैम, तब आप विजिट करने थोड़ी आओगे,
Exactly.
आप रहने आओगे.
Yes. So you're coming forever to India. Right? So we are coming forever to India. Therefore, it is not visit. Visit means what? Visit means a short amount of stay. Let's say I'm living outside India and I'm coming to meet my family, my relatives. That is a visit. Right? So the 182-day condition is only when I'm coming for a visit. Clear? So in case I'm leaving everything, the intention here becomes important. I'm not coming for a visit, I'm coming forever. Are we clear? Okay. So therefore, this is what it is. Now the second exception which is there, this is pertaining to the again 60-day rule only, but here we will have a different condition. So instead of 60 days, just write down consider 120 days. Are we clear? So instead of 60 days, we will consider 120 days. This is in respect of, again, an Indian citizen or a PIO who, being outside India, comes on visit to India, but this person has total income from the Indian sources greater than rupees 15 lakh. So basically, in case where, for example, I'm talking about the Indian citizen or a PIO having the total income more than rupees 15 lakh and who is outside India and coming on visit to India. In that particular case, we will consider 120 days instead of 60 days. So basically, it is not saying that the condition B is not applicable. It is saying that you will consider here 120 days instead of 60 days. Meaning, what are the conditions that you will test for such a person? Whether this person has stayed in India for greater than equal to 120 days and stayed in India for greater than equal to 365 days in 4 preceding previous years. So you need to check with respect to the two conditions which are there under clause B. Both the conditions need to be tested. The only difference is that instead of 182, instead of 60, we will consider 120 days. Are we clear? So such a person will be a resident in India if either he is resident, if he stays in India for more than 182 days, or he stays in India for more than 120 days and 365 days in the 4 preceding previous year. Are we clear? Yes or no? So these are the 3 categories that we need to see. And for counting the number of days, the date of arrival as well as date of departure, both needs to be considered. It is not that you will exclude those. When you arrive that day and when you depart from India that day, both days need to be counted while calculating the number of days. Are we clear about the residential status of individual or not? Yes. Prashant, what would be a situation where AY and PY would be the same if purpose is employment and there is no intention to return? How would the AY and PY will be the same? PY, previous year, is the year in which you are earning the income. So automatically AY will be the next year, Prashant. How will it be same? Yes, any questions so far? Yes or no? Fine. So if you satisfy either of the condition A or the condition B, you will become a resident of India. If you do not satisfy any of the conditions, then you will become a non-resident. Clear?
Yes, ma'am.
Okay. And for the purpose of 15 lakh, you have to see what? The Indian income, not the foreign income. What is Indian sourced income will mean? Income which is getting accrue, arise or deemed to accrue or arise in India. We'll see what is the income accruing or arising or deemed to accrue or arise in India. Fine. Now, there is one more small, kind of circular which is there, which I will take up from the module itself. Let me just share the screen of module. Yeah. So, how to determine the period of stay in India for an Indian citizen being a crew member? Now, what this circular says or this notification says is, in the case of foreign bound ships, where the destination of the voyage is outside India. It is not saying Indian bound ship. Indian bound ship is not covered. Here, this notification is covering the foreign bound ship, not the Indian ship. Where the destination of the voyage is outside India, there is uncertainty regarding the manner and the basis of determining the period of stay in India for an Indian citizen who is the crew member of such a ship. So, in case of an individual who is an Indian citizen, this explanation 2 has been inserted to section 6, which says that if there is an Indian citizen who is a member of the crew of foreign ship, not Indian ship. See, the exception that you have seen in exception 1, that instead of 60 days, we'll consider 182 days for a member of crew of Indian ship. We are not talking about that. Here we are talking about a foreign bound ship, of which an Indian citizen is a crew member. It says the period in respect of such voyage, number of days of stay, will be determined as per the notification. And the CBDT has issued a notification in that regard. Now, what does it say? In case of an individual who is a citizen of India and who is a member of crew of the foreign bound ship, the period of stay in India in respect of this voyage will not include the following period. What it will not include? So from the number of days of stay in India, you will exclude the period, which is the period starting from the date entered into the discharge certificate in respect of joining the ship up till the date entered into the discharge certificate in respect of signing off that by that individual from the ship in respect of such voyage. Now, what does this mean? So basically, the continuous discharge certificate is a certificate which, they like it's a kind of muster that they fill in, right? When they join the ship and when they leave from that ship. So those days when he is into the ship, right? When he is into the ship, which is originating from any port in India, but is going outside India, right? Or is coming from India and and is coming from foreign to India. So that is a basically foreign ship, right? So if this is a foreign ship and if there is an Indian citizen who is joining that foreign ship as a crew member, from his number of days of stay, while calculating the number of days of stay in India, we will exclude the period that he is in the ship. And how will we determine that period that he is in the ship? Based on the dates entered into the continuous discharge certificate. So the date he enters the ship, up till the date he sign off from that ship, that period will get excluded. Are we clear about this? So if you see, there is an example also given about this. So Mr. Ajay is an Indian citizen and a member of crew of Mauritius bound Indian ship engaged in carriage of passengers in international traffic, departing from Mumbai port on 16th July 2024. From the following details for the previous year 24-25, determine the residential status of Mr. Ajay for AY 25-26, assuming that his stay in India in the last 4 previous years is 415 days and last 7 previous year is 745 days. So they have given the date entered in the continuous discharge certificate in respect of joining the ship and then signing off from the ship. So if you see, what they have done is that Mr. Ajay is an Indian citizen. He's leaving India as a member of crew of Indian ship. So what will be his number of days of stay? How many number of days we will consider for a Indian citizen who is joining as a crew of the Indian ship? Yes.
मैम एक बार क्वेश्चन वापस से दिखाओ ना.
So I'm saying if there is an Indian citizen who is joining as a crew member of the Indian ship, what is the number of days that we consider?
मैम only first condition will apply.
Yes, which is 182 days, right? So we'll consider here whether he has stayed in India for more than 182 days or not, right? So here the Indian ship which is there is engaged in the carriage of passengers in international traffic from originating from a port in Mumbai up till Mauritius. Hence, this will be a eligible voyage for the purpose of notification. So for the purpose of calculating the number of days of stay in India, how many days would you exclude and how many days would you consider? So what will you exclude basically?
Ma'am, we will exclude the dates of continuous discharge certificate enter and
Right. So from basically 16th July up till 19th February. Right?
Yes, ma'am.
Correct. So basically 16 days of January, 16 days of July, then 31 days of August, 30 days of September, 31 days of October, 30 days of November, 31 days of December, and then 19 days of January. So which totals up to 188 days. So from the 365 days, you will exclude 188 days and this will come to 177 days. So therefore, he has been a resident or non-resident if he is staying in India for less than, if he's staying in India for 177 days, whether he's a resident or a non-resident.
Non-resident, ma'am.
Correct. He's a non-resident. So if you see the answer, it says the same. The residential status of Ajay is a non-resident as he has been in India for less than 182 days. Clear?
Ma'am,
Yes.
ये condition तो maybe only for merchant navy, is it?
Not merchant navy as such.
But
It
Indian
is.
navy also included in this.
Sorry?
This condition is only for merchant navy or Indian navy ships are also included in this because Indian navy ships are also go to foreign countries.
So this is for Indian Navy ships also. So if you see, merchant navy is applicable to the Indian Navy only. But if you see this question, it says Mauritius bound Indian ship. So this is basically a ship is Indian ship only. But it is going to outside India. So whenever a ship is there, which is either starting from India and going to a country outside India, or starting from a country outside India and coming to port in India, in those cases, this notification becomes applicable. Okay?
Okay, ma'am.
So let us go back. Kirti, yes, you have a question that in the case of exception B, whether condition A is also applicable. Yes, it is applicable, as I said. So here we will check A, whether he has been stayed in India or he has stayed in India for greater than equal to 182 days during the previous year, or you will check the condition B, and in condition B, instead of 60 days, you will take 120 days. Clear, Kirti? Yes, any other question? Okay. Now, there is another concept of deemed residency. There is another concept of deemed residency. Now, what does this deemed residency mean? So, they say that if there is a person, an individual basically, who is an Indian citizen. So, an Indian citizen, right, who has total income from, again, Indian sources greater than 15 lakhs. Greater than 15 lakh will be deemed to be a resident of India, will be deemed to be a resident of India if he is not liable to tax in the country of his residence. Okay. So basically, if there is an Indian citizen who has the total income from Indian sources more than 15 lakhs, he would be considered as deemed to be a resident of India if he is not liable to tax. If he is not liable to tax in the country of residence, in the original country of residence. Now, let us understand why is this deemed residence condition introduced. Because here if you see, a person would be deemed to be a resident of India even if this person has not come to India for a single day. So if this person has not come to India for a single day also, he would still be considered as a deemed resident of India just because he is not liable to tax in the country of residence. So what is the intention behind this? So basically the intention here is that, there were many Indian citizens who were trying to avoid the taxation on their income by manipulating the number of days of stay. Right? So basically, what used to happen is that individuals used to manage this 182 days, 60-day condition easily and were becoming the resident of some tax haven countries. What are tax haven countries, student?
मैम जहाँ पे एवरेज टैक्स रेट इंडिया की एवरेज टैक्स रेट से कम होगा.
कम नहीं होगा, basically 0 or 1%, 10%, very lower tax to this, zero tax jurisdiction.
जैसे मैम दुबई है वो लो टैक्स रेट है वहाँ पे.
Right, absolutely. So this is something that is leading to the tax avoidance situation. So this requires, therefore, that the individuals to be captured in the Income Tax Act because they were manipulating their number of days of stay and therefore saying that we are not resident of India and therefore we will not pay any taxes in India. And that is the reason why they have introduced this deemed resident concept for basically as an anti-tax avoidance provision or a specific anti-tax avoidance provision, as we call it SAR, specific anti-avoidance provision. So that is the reason why this particular deemed residency provision that you see, that if there is a person who is not liable to tax in the other country and he is a citizen of India, having the total income in India more than 15 lakhs, he will be considered as deemed resident even if he has not stayed for a single day. So will it include the individuals who are not paying taxes in Dubai? The answer is yes. Yes, it may include. There is no exception over here. So therefore, he may be considered as a deemed citizen of India or deemed resident of India. So if you are not paying taxes in any country of your residence, you will be deemed to be a resident of India, even if you have not stayed for any number of days in India. Are we clear? Right? So this is the last category. Now, once you are considered as a resident of India, there are other additional conditions to be tested to determine whether you are a resident and ordinary resident or a resident and not ordinary resident. So under residency also there are two sub-criteria. One is resident and ordinary resident, ROR, and second is resident and not ordinary resident, which is RNOR. Right? ROR and RNOR. So for that, we need to see the two additional conditions. So just write down over here. for the RO. What are the two additional conditions? Does anyone remember?
Yes, ma'am. I think 2 out of 10 years and 720 days in 7 years.
Yes. So basically, you will be a resident and ordinary resident if you have been a resident in India, number one. For 2 out of 10 preceding previous years. Right? 2 out of 10 preceding previous years. And so these both conditions need to be satisfied if you want to be called as ROR. Stay in India for greater than equal to 730 days in 7 preceding previous year. So if you satisfy 2 out of 10 condition, 2 out of 10 previous year, you were a resident, meaning you stayed either for more than 180, 60, whatever conditions are applicable to you. And Kirti, it's not or, it is and. And you have stayed in India for greater than equal to 730 days in 7 preceding previous year. You would be considered as the resident and ordinary resident. If you fail to satisfy any of these conditions, then you would be a resident and not ordinary resident. Are we clear? However, for a deemed resident, he will always be a resident and not ordinary resident. Because see, for deemed residency, there is no condition of days of stay. So we can't test him under additional condition. So a deemed resident is always RNOR. Similarly, if an Indian citizen, so these are the exceptions that I'm talking about, again to this one, who has total income greater than rupees 15 lakhs from the Indian sources, right? And comes on visit to India. He will also be RNOR if his stay is greater than 120 but less than 180 days. So for him also, we will not test the additional condition. Are we clear? Greater than equal to. So there are these two exceptions for which we will not test the additional condition. Is it clear or not? Yes?
Yes, ma'am, clear.
Any questions to anyone?
मैम
Yes.
इंडियन सिटीजन जिसकी 15 लाख से ज्यादा है फ्रॉम इंडियन सोर्स, तो वो तो मैम वैसे ही डीम्ड रेजिडेंट हो जाएगा.
नहीं, deemed resident तब होगा, you will be a deemed resident only when you are not liable to tax in other country. If you are coming on visit to India, then we will test you under 120-day rule.
Okay.
Okay?
Thank you.
Okay. Any other question? Yes. Fine. Okay. Yes. So let's move forward. This is the residency of the company. Okay. So residency for the individual. Now we will move towards the other entities. right? This is only for the residency of individuals that we have spoken so far. Okay, so I'll just quickly revise before we move forward. So first condition is that whether we have stayed in India for more than 182 days or not. Second is whether we have stayed in India for more than 60 days, but less than, more than 60 days and for more than 365 days in the 4 preceding previous years. So either of these two conditions you satisfy, you become a resident. If you fail to satisfy any of those conditions, you become a non-resident, right? Then for an Indian citizen who is going outside India for employment or as a member of crew of Indian ship, right? In that case, you will only consider 182 day rule. For an Indian citizen who comes on visit to India and having total income less than rupees 15 lakhs. So then also you will consider only 182 day rule. However, if there is an Indian citizen or a PIO who comes on a visit to India having total income more than 15 lakhs from the Indian sources, then you will consider either 182 day rule or 120 days in the current year and 365 days in the 4 previous years. And then there is deemed residency, which says that even if you have not stayed for a single day, but you are not liable to tax in any other country, if you are an Indian citizen having total income from Indian sources more than 15 lakh, you will be deemed to be the Indian resident. Clear? And then you check whether you are ROR or RNOR. So additional two conditions are resident for 2 out of 10 previous years and 730 days or more in the last 7 previous years. But again, there are 2 exceptions. An Indian citizen or PIO who comes on a visit to India and has a total income more than 15 lakh from the Indian sources, he will be considered as RNOR if his stay is greater than 120 but less than 182 days. Here you should also write even PIO. Or a deemed resident is again always going to be RNOR. Are we clear? Yes or no?
Yes.
Now,
Yes.
okay. What is the difference between ROR and RNOR? Who is ROR? Who is RNOR? What is the difference between two? Why we have 2 set of residents? Yes, we have done this as in IPCC also. Yes.
मैम ROR के लिए ऑल इनकम टैक्सेबल इंडिया में होगी एंड RNOR के लिए फॉरेन इनकम टैक्सेबल नहीं होगी इंडिया में.
Foreign income taxable nahi hogi. Okay. Which is the section that we are looking at? Any idea?
Ma'am, additional conditions are in section 6, subsection 6.
So that is the additional condition, but I'm saying that what is the difference between the 2 of them? So that is the reason. What is the reason I'm asking is because there has to be some sort of mind behind it that the government has created 2 set of residents. So I'll tell you. Section 5 of the Income Tax Act talks about the scope of total income, right? Scope of total income means what? Basically the nexus will be created for the resident, non-resident in a different way, right? Because as I said, as a resident, obviously the nexus will be higher. As a country, I can tax that particular individual in a way because he is a resident of my country. I cannot tax a non-resident alike because the non-resident is not utilizing the infrastructure of my country to an extent our resident is utilizing. Isn't it? So basically, if you are a resident, right, the Indian government is giving you a lot of benefits as a resident of India. You are having a home over here. You are able to, utilize the public infrastructure. Whether a non-resident is utilizing in that aspect, the answer is no. So taxes are collected for what purpose? Why do you pay income tax? What is the reason that income tax is getting collected from you?
And for using the economic resource.
Correct. So basically, it's the price that you are paying for using the resources. Because see, I understand in India you may not find exact quid pro quo, right? Quid pro quo as an exact benefit out of what you are giving. So you maybe feel that's the reason why we feel a pinch, because we do not have adequate public infrastructure. We do not have adequate government hospitals. So there is a reason why you find a perception that I'm paying so many taxes, but what I'm getting in return. Because the country is wide, there are certain economic strains on the country, and therefore it's very difficult. But the basic ideology of collecting the taxes is the price that you are paying for using the public infrastructure. So as a resident, let's say for example, if I'm a tenant, right, in a house, I would be paying rent to my landlord, right? Or if you go to a hotel where you stay for like 1 or 2 days, would you pay the same rent as you pay for like using the house for 1 year? The answer is no. Right? So a non-resident is like a person who is coming and staying in a hotel. Whereas a resident is a person like, who is owning a house. So obviously the rentals will differ and the taxes will differ. And a country can also tax the income in a different manner. So section 5 is the scope of total income. For a resident and ordinary resident, let us write it down. What is covered is income accruing or rising in India, income received in India, income accruing or arising outside India. So basically for ROR, the global income is taxable. For ROR, the global income is taxable. Whereas for the RNOR, income accruing or arising in India, income received in India, and income accruing or arising outside India from a business controlled or profession set up in India. From business controlled in or set up in India. And for the non-resident, only the income accruing or arising or deemed to accrue or arise in India, or income received in India. Here you should write or deemed to accrue or arise in India. Here also. So if you see, for ROR, global income is taxable because he's a resident of my country I have a strong connection with that person. So whatever income he earns, wherever he earns, I will tax it. However, for an RNOR and NR, if you see, only the income accruing or arising in India or deemed to accrue or arise in India or income received in India, basically the Indian sourced income is only taxable. So that is the reason why the first point that we started with, nexus, either the residency or the source of income. If I'm not a resident, the India can only tax if I have a source of income in India. And income accruing or arising or deemed to accrue or arise in India or received in India is nothing but the income getting sourced in India. Right? However, then you will ask a question, obviously, then ma'am, why do we have RNOR if for the RNOR and NR we have the same set of incomes? So ideally we should have only ROR or we should have resident and non-resident. Why we have RNOR, a second category? The reason because, see, when you become a resident for the first year, when you come to India, when you cross that 182-day threshold, you are coming from a different country. There you may have a house, there you may be generating some interest income, some rental income, some capital gain on sale of shares, let's say some dividend income. Now, all of a sudden, when you come to my country and become a resident in the first year, I'll say, I will tax all your income which was even accruing outside India because now you have become my resident. So what will happen? It will cause hardship to that individual. So that is the reason why India gives a 2 years breathing period. Now, where does this 2 years come from? 2 years is coming from this particular point itself. He should be a resident in India for 2 out of 10 previous years. Only then he will be a ROR. In the 10 previous years, you should have been resident for 2 out of 10 previous years. So if you have never been a resident in India till now, and then now you are coming to India, you will get a breathing period of 2 years. So within that 2 years, you have time that, you can close all your assets, all your incomes there in the other country. So India gives you a breathing period of 2 years and does not tax your outside income. Are you getting this? That is why we have RNOR. But there is a difference between RNOR and NR. In NR, India cannot tax any income which is accruing or arising outside India. But for RNOR, India is taxing the income accruing or arising outside India if it is arising from a business which is controlled or set up in India. So if, let's say, for example, I have an income, I have a business income in Germany. I have become the RNOR. Now that business income in Germany, I'm entirely managing that business from India. I'm sitting in India and earning that business income. I'm giving the directions from India. I'm making the, orders from India. I'm serving all the orders from India. So everything is being controlled from India. So even if the income is arising in Germany, so if it is arising as business income, it will be taxed in India. So only a limited extension is given for the income accruing or arising outside India, only if it is from a business control or profession set up in India. Are you getting the difference? Yes or no? Fine. Is this clear? Yes.
आपने जैसा कि अभी कहा कि बिजनेस यहाँ है और कंट्रोल कर रहा है बंदा और सेटअप भी इंडिया में है, वो सारे इंस्ट्रक्शंस दे रहा है, बट वो बंदा तो वैसे भी इंडिया में ही है ना, तो वो इंडिया में स्टे करेगा तो वैसे भी रेसिडेंट ही कहलाएगा ना.
He is a resident, but he is RNOR. So for RNOR, we can only tax the Indian sourced income. We can tax foreign sourced income if it is controlled as a business from India. Are we clear? Is this clear or not?
मैम बट जो आप RNOR जो इंडिविजुअल कंट्रोल कर रहा है आप उसका बोल रहे हो ना?
Yes.
हाँ, तो वो तो वैसे भी इंडिया में ही है ना, तो हम उसको RNOR कैसे कहेंगे? उसका तो वैसे भी डेज भी कंप्लीट हो जाएगा.
See, days complete होगा. You will be a resident. But then you have to check additional condition, whether you have stayed in India for more than 730 days in the last 7 years, and you should have been a resident in 2 out of 10 previous year. Let's say I'm in my first year. I've not been a resident in 2 out of 10 previous years. And I have also not been in India for more than 730 days. Then I will be RNOR.
Yes, ma'am. Now I
Got
can
it?
understand.
So
Can you
I will be a
also-
resident, but I will still, I may still not be a resident and ordinary resident. If I'm not a resident and ordinary resident, then what will happen? India cannot tax my foreign income. So India says I can tax foreign income if you earn it from a business which is getting controlled from India. Are
It
we clear?
means जो वो इंडिविजुअल है वो हमेशा से इंडिया में नहीं था, हाल ही में आया है, लेकिन वो अपना बिजनेस कंट्रोल कर रहा है.
Yes.
यस मैम, क्लियर. थैंक यू.
Yeah. Okay. Any other question? Yes, Kirti, you have question. There will be a double taxation in case of ROR where the foreign income is taxable in India and also taxable in country where is a non-resident. Yes, certainly, Kirti, there will be a double taxation. We'll come on to this point in the upcoming lectures as to what or how the double taxation can be solved and what is exactly the cause of double taxation. So you understood it correctly. Yes, that's right. Okay. Any other questions, students? Okay. Yes, is this clear perfectly to everyone? Clear? Fine. Okay. So, as I said that, you have to make sure that what is your residential status and then decide upon the scope of the total income. Are we clear about it? Yes or no? Any questions? Any doubts?
Clear, ma'am.
Okay, clear. Fine. Let us, look at one question from your module itself before we go on to the break, so that you understand exactly how the scope of total income is determined. Yeah. So Piyush, who returned to India on 12th June 2024 for permanently residing in India for a stay after a stay of about 20 years in UK. First of all, what will be his residential status? He's coming on 12th June and he is, yes.
No, resident but non-ordinary resident.
Correct. He will be a resident but not ordinary resident. Fine. So, he provides the sources of his various income and seeks your opinion. Income of the rent of flat in London, which was deposited in a bank there. The flat was given on rent by him after his return to India since July 2024. What will be the taxability?
Not taxable, ma'am.
Why not taxable?
Because it is not his business.
Yes. So rental income from a flat which is there, it is accruing or arising outside India, right? And this is also received outside India. Therefore, it shall not be taxable in India. Correct? Secondly, it is not his business income that he's controlling from India. So this will not be taxable. Dividends on the share of 3 German companies which were being collected in a bank account in London. He proposes to keep the dividend on shares in London with the permission of the RBI. Yes. Faster.
मैम आई थिंक ये भी टैक्सेबल नहीं होगा.
Correct. This will also not be taxable because this is accruing or arising outside India. Dividends are not business income, right? He's not into the business of trading in shares or investing in shares. He has got two sons, one of whom is 12 years and other is 19 years. Both his sons are staying in London and not returning to India with him. Each of his sons is having income of rupees 75,000 in UK in foreign currency not received in India and of rupees 20,000 in India.
मैम इसमें क्या क्लबिंग लगेगी माइनर की?
Correct, yes. So for a minor, the income will be clubbed. But which income will be clubbed?
मैम इंडियन इनकम 20,000 जो इंडिया में रिसीव
Correct.
होगी वो.
Correct. Only the Indian income will get clubbed and not the entire income because the
मैम
other income is outside India.
ओनली 12 years old की होगी कवर बस?
Yes, only for 12 years because for the 19 years he's a major, so there will not be any clubbing of income. And that too only the Indian income of the minor son will get clubbed, which is 20,000. Clear? Yes or no?
Yes, ma'am.
Yes, ma'am.
Okay. Next one is during the preceding year, when he was a non-resident, he had sold 1,000 shares which were acquired by him in British pound sterling and the proceeds were repatriated. The profit in terms of British pound sterling on sale of these 1,000 shares was 175% of the cost at 37,500 rupees, while in terms of Indian rupees, it was 55,000.
ये टैक्सेबल तो नहीं होनी चाहिए.
Why? Repatriated Kirti means it is remitted back to India.
मैम ये अराइज आउटसाइड, एक तो फॉरेन शेयर थे इसलिए
Yes.
और बाहर सेल करे थे. इंडिया में सिर्फ लाए गए हैं तो नहीं होनी चाहिए.
Yes, right.
Ma'am, remittance also is not taxable.
Correct. See, it was earned earlier. First of all, it is not earned in the current year. It was earned earlier. Even if it would have been earned in current year, he is still RNOR. And this is income accruing or arising outside India. Just because he is repatriating here, repatriating meaning sending here, it doesn't mean it is received in India. Received in India means that it should have been directly received in the Indian bank. He's sending it back. Remittance of money from outside to India is just like, you're sending the money from one bank account to another bank account of yours. Right? You have a bank account in London, you are just sending it to your Indian bank account. That will not make the income taxable. So this income will also not be a taxable income. Clear? Any questions, any doubt? Yes? Okay. Now, with this, there is one more circular that I would like to cover here before we again go on break, since we have started on remittances. Let me open up from your module itself.
मैम यहाँ पर भी एनआरई एनआरओ अकाउंट का कंसेप्ट आता है क्या, या जैसे कि
I'll
अगर
just touch on that only.
ओके
me a second. Yeah. Yeah. So basically, there is the circular of CBDT in respect of the salaries credited to the NRE account, non-resident external account. Now, what are NRO, NRE account? Non-resident ordinary and non-resident external. These are the two accounts which you have as per the FEMA regulations, right? So, ordinary account is basically nothing but like your saving bank account that you have in India, right? It becomes NRO. When you leave India, you become a non-resident. That account, you have to convert it into NRO account. So it's a normal regular saving account. That is particularly maintained for receiving any income in India. For example, dividend on shares, capital gain on shares, rental incomes, whatever income you earn in India, that will be credited to your NRO account. Then you have the NRE account. So whatever incomes that you are earning outside India, or you want to repatriate the funds back to India, you want to remit the funds to India, you want to give the funds to your parents. Let's say you are earning the salaries outside India. Now you want to give the funds to the parents. So that account is maintained in foreign exchange, which is a non-resident external account. So the name itself suggests that this particular account is maintained in a foreign exchange where you can credit the funds in foreign exchange in this account. Now it is possible that you may be working for the foreign companies, right? And instead of foreign company giving you the salary and then you giving the salary back, you sending the salary from US back to your parents in India in your NRE account. So this is a little inconvenient, right? That you get salary in, let's say, US account and then you transfer the salary from US to India. So you will have to pay a lot of conversion charges, bank charges on the money that comes, right? So rather you will, ask your employer that, look, can you please, put my salary in my NRE account in India directly instead of giving it to me in US. And the employer agrees as a matter of convenience. Now, whether this can be called as the income received in India for a non-resident, that is the question. There is no clarity on it. In my opinion, this cannot be called as income received in India because the income is getting received at a place where you are already working. The salary is becoming due where you are working, right? It is getting accrued there. It is becoming due there, right? And therefore, the receipt will also be at the point where the income is getting accrued. It is just for the matter of convenience that the employer is remitting the salary directly in India. Are we getting it? So therefore, this should not be meaning that income is received in India. Income is received in India means what? That the income is getting first received over here. It's not the case. The salary is being received outside India. It's for the matter of convenience that it is being credited to my Indian account. However, for the seafarers who are on the ship, right? Only for them, not for all the non-resident employees, only for the seafarers, the CBDT has given a circular which says that income by way of salary, which is received by the non-resident seafarers for the services rendered outside India on the foreign ships, if it is credited to the NRE account maintained by them in India, it will not mean that the income is received in India. And this will not fall within the scope of total income. So if a salary is accruing to a non-resident seafarer who is rendering the services to a foreign ship, it can be an Indian ship or a foreign ship. That doesn't matter. But it should be a foreign going ship. It should be going outside India. It will not be included in my total income just because the salary is received in my NRE account in India. But this clarification, mind you, is only for non-resident seafarers and not for all the non-resident employees. Are we clear, students? Yes or no?
मैम एक बार एनआरओ अकाउंट का एक बार वापस से बताएंगे प्लीज?
NRO account is nothing but your simple saving bank account which you already have. इसी को आप convert करते हो NRO account में. Your saving current existing saving bank account will be converted to NRO account once you leave India and you become a non-resident. This is basically that you earn any incomes in India. Your rental, dividend, capital gain, whatever income you want in India, you can take in your Indian saving bank account, which will be called as NRO account once you become a non-resident.
Okay, ma'am. Clear.
Yeah. Any other questions, students? Any doubt before we go on break? No? Okay. So let's take a small break of 10-15 minutes and then we get back. Now we will proceed towards the residential status of the other entities. Let us start with it. First, we'll talk about the residential status of the HUF. Is the screen visible to you?
Yes, ma'am.
1 second. No. Okay. So, residential status of the HUF is dependent not on the number of days of stay, right? Because it's an entity now that we are talking about. For the individuals, you can determine that how many days they have stayed in India. But for HUF or any other entity, you can't. So a HUF would be resident in India if the control and management of the affairs is situated wholly or partly in India. So if control and management is wholly or partly in India, right? Now, what do you understand by wholly or partly in India? Any idea? What do we understand by wholly or partly in India? Yes. Yes, students, what is wholly or partly in India? What do we mean by wholly or partly? Very simple.
Ma'am, some of affairs are controlled outside India.
Yeah.
Or whole affairs are in India controlled.
Yes, right. So basically, see, wholly or partly in India, or first of all, let us understand what do we mean by control and management in India, right? So control and management means what? The you saw this particular term even for the RNOR, control. If the business is controlled or profession is set up in India, right? So what do you understand by the term control, first of all? How do you say that if a business is controlled in India? The control and management refers to the control and the management of the strategic decisions, not merely routine day-to-day decisions. Are you getting this point? It
मैम जो
doesn't mean, yes,
मैम जो कंट्रोल्ड पर्सन होगा उसके रेजिडेंसी पे मतलब
I didn't get it,
जैसे
sorry.
HUF जो होता है मैम उनके कर्ता जो होते हैं वो अगर इंडिया में है तो
Correct.
ये माना जाएगा कि कंट्रोल वो इंडिया से कर रहे हैं.
Correct. Yes, that's right. So basically, let's say for example, for the HUF, if I talk about it, the control means that if the HUF strategic decision making is getting controlled from India, right, is basically decided in India. So that is the meaning of control and management, not our day-to-day decision, like, daily basis decision, like, how much expenditure to incur, basically with respect to how much salaries to be paid. That is day-to-day decision. That is not what we are looking at. What we are looking at is the control and management of the strategic decisions. So where are the strategic decisions being decided? Where are the strategic decisions being controlled from? Basically, where to invest, which operations that a company should undertake. All of those decisions fall under the control and management category. Are you getting this particular point? So when I talk about the control and management, I mean these high level decisions or where the head and brain of the company is situated. Those decisions I'm talking about. Are we getting this particular point? So that is where I will decide that here is the control and management. So either it should be wholly in India or wholly or partly in India. Are we getting it? Partly in India, meaning what? That part of the decisions, let's say part of the decisions are being taken outside India. Let's say some of the co-partners are outside India. The Karta is sitting in India, or two board meetings are held in India, two board meetings are held outside India. So that is basically the partly in India. So either it should be wholly in India or it should be wholly or partly in India. Then only we can say if the particular decisions are, the HUF is controlled or managed wholly or partly in India. Clear about it? Yes or no? So a HUF will be resident where the head and brain of the HUF is situated in India. Now under the HUF also you can have a ROR and RNOR. The ROR basically will be decided upon the residential status of the Karta. Right? So an HUF will have or will be so if the Karta has been an ROR, then he will also be ROR. If the Karta is RNOR, then he will also be, HUF also will be RN. Are you getting this particular point? So the HUF's residential status will be based on the control and management. But as far as the ROR or RNOR is concerned, that will be dependent upon the residential status of the Karta. When will the Karta be ROR? What is the condition for ROR? Yes, what is the condition for ROR for Karta?
Ma'am, 2 years out of 10 years preceding years.
Normal conditions. Yes, that's right. So whatever the conditions we have for the RNOR and ROR, that is the same condition we are saying it is applicable for the HUF also. Are we clear? Okay. So that is about the residential status of the HUF. Now moving towards the firm AOP and BOI. Again, these will be resident in India if the control and management is wholly or partly in India. So if control and management of affairs, I'm writing the short form, don't write short forms in exam. Then only the AOP, BOI or the partnership firm will be resident in India. Here, there is no question of ROR and RN. This will not be further categorized into ROR or RN. Are we clear? Yes. Last one. Now, this is the most important one and the time that we will spend on for the rest 1 hour. Residential status of company. Okay. First of all, tell me, what is the difference between, I've asked this question, I remember very clearly earlier also, what is the difference between a resident company and a domestic company? Yes. What is the difference between a resident company and a domestic company?
मैम रेजिडेंट कंपनी होगी जो सेटअप इन इंडिया है और कंट्रोल्ड फ्रॉम इंडिया है, और मैम डोमेस्टिक कंपनी वो भी कंपनी होगी जिसने फॉरेन कंपनी जिसने डिविडेंड डिस्ट्रीब्यूशन के लिए स्पेशल अरेंजमेंट कर रखे हैं.
Yes, absolutely. So see, Why is it, first of all, that we have, different companies which are there? Like, what is the need of the domestic company? What is the importance of domestic company under the income tax? And you're right. Domestic company is the one which is incorporated in India, or it has made the arrangements. It's a foreign company which has made the arrangements for declaration of dividend in India. But what is the purpose of the resident company? What is the purpose of domestic company? Don't tell me about resident. What is the purpose of domestic company?
रेजिडेंट कंपनी मेरे ख्याल से मैम इनकम को इस स्कोप ऑफ इनकम के लिए है कि कौन सी इनकम पे टैक्स लगेगा। मैम डोमेस्टिक कंपनी फॉर रेट के लिए है कि कौन सा रेट टैक्स पे लगेगा, टैक्स रेट कौन सा अप्लाई होगा।
Absolutely, 100%. It's right. So domestic company is for the purpose of deciding the tax rate, right? And the resident company is for the purpose of determining the scope of the total income. So this is important for determining the scope of total income. Whereas a domestic company is basically for determining the tax rate. Right? So if it is a domestic company, what is my tax rate, students? Just to quickly revise with you.
मैम PY 22-23 के लिए 25% अगर 400 करोड़ से ऊपर होगा टर्नओवर, अदरवाइज 30%।
AY, okay, 30% and 20, and what did you say other one? 22%, right?
Yes, ma'am. 22-23 PY.
22, and then we have for manufacturing companies also.
Yes, ma'am. वो 115BAA में
15%.
15% and 22% other.
Right? And then we also have for the smaller companies whose turnover is less than 400 crores. For them, we have 25%, right? That's for the domestic company. For the foreign company, what is the tax rate?
मैम FTS के लिए I think 35% है and otherwise 40%.
It is 35 only now.
Okay, ma'am.
Yeah, it's entirely 35. 40 was earlier. So, the foreign company has a tax rate of 40. The domestic company has a tax rate of 30, and then 22, 25, and 15. Correct? So, domestic company is not deciding my scope of total income. It is there to determine the rate of tax. Right? For determining my scope of total income, I will have to see whether a company is a resident company in India or not. And when a company is a resident company, it is an Indian company. I'm not saying it's a domestic company. What is an Indian company, students? See, there are different companies that we are talking about. What is an Indian company?
मैम जो इंडियन कंपनीज एक्ट में रजिस्टर्ड है, इनकॉर्पोरेटेड है।
Correct. Which is registered and incorporated under the Companies Act 2013 or 1956 earlier. That is an Indian company. A domestic company is also an Indian company and a foreign company which has made the arrangements for declaration of dividend in India. But here, for the residential status, they don't say it is a domestic company. It should be an Indian company. Be very clear while writing your exam. Secondly, a foreign company having place of effective management in poem. Earlier, before 2015, they used to have the same, wordings as control and management wholly in India. They did not have partly in India, they had wholly in India. So because of which there was a lot of tax avoidance which was being taking place. So what they used to do is they used to hold one board meeting outside India and they would say that the control and management is not wholly in India. And also to align with the international standards of determining the residency of company, they have replaced it with the place of effective management concept. Clear? Now, what is this place of effective management? This becomes very important to determine. What is the place of effective management in India? So, place of effective management is a term which means, let me take you to the module again. See, place of effective management term which is there. It means the place where the key management and commercial decisions that are necessary for the conduct of the business of an entity as a whole are in substance made. What a big jargon it is, isn't it? No. Understand it carefully. Place of effective management is a place. It is a country where the key management and commercial decisions. What did I tell you about the control and management for the HUF, for the firm? What did I tell you? Place where the strategic key decisions, not the routine, not the day-to-day decisions are being taken up. I'm not deciding how to, particularly sell. I'm not deciding किसको रखना है, किसको employ करना है, क्या करना है. Day-to-day decisions is not the place where the poem is. It should be the place where the key management and commercial decisions that are necessary for the conduct of business. Whether we want to merge with another entity, whether we want to divest this unit of the company, what products we want to get into, whether we want to discontinue a particular product, how do we want to price a product, which products we will trade in which market. Those are the key management and commercial decisions. Where are those decisions being taken up? Are in substance made. So this is a substance over form test. You may show anything on paper कि आज हमने board meeting India में रख लिया and we say that no, this company is management is in India. No. Where the decisions are in substance being made. Substance meaning what? Where actually we are taking the key decisions. That is the place of effective management. Now, this is easier said than done, right? It's a very subjective test. Where are the effective decisions being taken up? So, how do we identify? So, for that purpose, the CBDT has given us the guidance. So, CBDT had issued a circular with respect to determining the place of effective management, which is circular number 6 of 2017. So CBDT circular number 6 of 2017, this provides the guidance for determining the point. Are we clear? Now, what does the guidance it provides? Are we clear? So, what guidance it says? It says, for determining the poem, the first test that we need to undertake is to identify whether the company is engaged in active business outside India. TBOI test as we call it. Active business outside India test. Students, any idea what is the meaning of active business? Sorry, what is active business?
मैम जिसमें एक्टिविटीज हो रही हैं।
What is active business? Not where the activities are undertaken. Yes. What is active business? See, active business, as the name suggests, is the principal business of the entity. There are two kinds of income that we, in international tax kind of, jargons that we use. Active business or the active income and the passive income. Active income means the income from the main operations, the ordinary income, the income from business activities of the company. Passive income means ancillary income. What could be the examples of students' passive income?
मैम इनकम फ्रॉम अदर सोर्स।
Yes, income from other sources. Dividend, interest, capital gains, rentals, all of these are passive. So here the test is to identify whether the company has the active business outside India. Right? Whether the company has active business outside India, meaning it is actively carrying out its operation, it is earning the income from the operations carried out outside India, or whether the operations are carried out in India. Now, what are the conditions for this test? Number one, whether the passive income is less than 50% of the total income. Now, as I said, passive income means what? So, passive income here is defined as the income which is from the royalty, dividend, capital gains, interest or rental income. Royalty, interest, dividend, capital gain, rental, or so for a banking company, obviously, or a financial institution which is engaged in the business of giving the loans, interest will be obviously an active income and not a passive income, right? Because for them, interest is a income from the trading operations. But for others, the interest is always a passive income. Or income from the transactions. Income from the transactions where both sale and purchase is to and from the associated enterprise. So, what does it say? That passive income will include rental, dividend, capital gain, interest, royalty, and the income from the transaction where the income is getting generated from the goods purchased from an associated enterprise and sold to another associate enterprise. So any income which is generating out of the purchase and sale to A, that will also be counted as the passive income. Now students, the obvious question that you should get is that, ma'am, let's say for example, I'm taking you towards again the module to understand this. Can you see the example over here? Company A is a sourcing entity for an Indian multinational group incorporated in country X. and is 100% subsidiary of the Indian company PICO. The warehouses and stock in them are the only assets of the company, and these are located in country X. All the employees of the company are also in country X. The average income-wise breakup of the company's total income for 3 years is 30% of the income is from transaction where purchases are made from the parties which are non-associated enterprise and sold to associated enterprise. 30% of income is from transaction where purchases are made from A and sold to A. 30% of income is from transaction where purchases are made from A and sold to non-A. And 10% of the income is by way of interest. Now, whether the first test that the passive income should be less than 50% of total income is satisfied in this case or not. What do you think? Yes. What do you think? Whether this test is satisfied? Yes or no? Yes, students, faster. Yes, please. What are the passive income? Whether first 30% of income is from transaction where purchases are made from parties which are non-AE and sold to AE, whether this is a passive income?
No, ma'am.
Why?
मैम यू हैव आपने अभी जैसा कि लिखवाया कि जो भी ट्रांजैक्शन है वो परचेज
Right.
एंड सेल एसोसिएट एंटरप्राइज से होना चाहिए, नॉन एसोसिएट.
Absolutely. Absolutely. So the income should be from purchase and sale to A. It should not be a case कि purchase AE से किया है, sale non AE को है, या purchase non AE से किया है and sale AE को है. That should not be the case. Are we getting this point? So therefore, this first transaction is not a passive income. What about the second one? Yes.
Yes, ma'am. It will
be, right? Because the purchase and sale both are to A. What about the third one?
Third one is also not satisfied, ma'am, because
Right.
sold to non-associate.
Correct. Yes. And last one?
ये भी पैसिव इनकम होगी मैम, इंटरेस्ट है.
Absolutely. Because this is not a banking company, right? So this will also be a passive income. So whether this test is satisfied? Yes or no?
दो हाँ दो ना.
Whether it's 50%, it's not 50%. It's 40, 30 plus 10, right?
ओके, यानी
Isn't it?
कंबाइन करना था.
Yes.
ओके मैम.
So it is like you have to combine all of them. So it is 40% of my total income. So therefore, this test is not satisfied. Are we clear? Yes or no?
क्लियर मैम.
So therefore, the first test is that either the income should be from dividend, interest, royalty, or rental income, or from the transaction where purchase and sale both are to AE. What is the meaning of AE? Yes, what do we mean by A? Yes, students.
Ma'am, the enterprise which has interest in the company, sorry, 20% or more.
See, for A, you will have to go to the transfer pricing class. So in the transfer pricing, you will learn what is the meaning of the associated enterprise. Are we getting it?
ये मैम
So
associate
yeah.
कंपनी से अलग है.
Yes, so associated enterprise has basically different conditions that when you have a control, when you have, given some loans, when you are the only creditor or debtor of that company. So then there are different conditions for categorizing it as associated enterprise. And I'm sure the transfer pricing class is not yet done with you, right?
Yes, ma'am.
Yeah, so you will learn there about this particular associated enterprise and then 92A in detail. That what do we mean by, but for now you can understand that this means a related party in a way. Fine. So
Yes.
let us proceed further towards the next test. I'm sharing my screen again. Yeah. So next test is that not more than 50% of the assets are situated in India. So second test is less than 50% of assets are situated in India. Okay. Now assets meaning all the assets. Here they have said how do you determine the value of the assets? So the value of the assets will be determined. In case of the depreciable assets, then the value of the assets will be the average of its value for the tax purposes in the country of incorporation. So you will take the opening and the closing ka average as per the tax records of the other country. In case it's a block of asset concept in that other country, then you take the average of the value of that block at the beginning and at the end of the year. And in case of any other asset which is a non-depreciable asset like a land, then you will take the value as per the books of accounts. So the value of the assets in India should be less than 50% of the total assets which the company has. Next test. Less than 50% of the employees. Less than 50% of the employees are situated in or resident of India. Now again here for the purpose of employees, you will take the number of employees. Right? So you will take the average number of employees at the beginning and at the end of the year. And here the employees will include not only the persons which are employed by the entity, but also the independent consultants which are performing the task similar to the employees. So to avoid this particular test or to come out of this test, what the entity may start doing is they may not hire the people in India. They may rather hire some independent consultants, right? So then in that particular case, they may say that these people are not our employees and the test is not satisfied. But employees will not only include the employees, but also the people who are performing the similar task as performed by the employees. Clear? And the last test is less than 50% of the payroll expenditure, less than payroll expenditure on such employees. Okay, let me write it like that. Payroll expense on the Indian employees, I'm writing, should be less than 50% of my total payroll expenditure. Now, let me take you again to these examples because these examples are nothing but the CBDT examples only. Yeah. See, the facts remain the same as that in example 1, where we decided that what is the passive income, right? With a variation that ACO has total of 50 employees. 47 employees managing the warehouse, storekeeping and accounts of the company are located in country X. The managing director, CEO and sales head are resident in India. The total payroll expenditure on these 50 employees is of rupees 5 crores. The annual payroll expenditure in respect of MD, CEO and sales head is rupees 3 crores. Now you tell me whether this ABOI test is satisfied in this case or not. Yes. Yes.
मैम इसमें पेरोल वाली कंडीशन पास हो जाएगी, मतलब 50% से ज्यादा एक्सपेंडिचर इंडिया में हो रहा है, तो मैम ये एक्टिव बिजनेस इन इंडिया होगा।
ये एक्टिव बिजनेस इन इंडिया होगा। Yes. So, if you look at the conditions over here, it says out of the 50 employees, only 3 are situated in India. Whether this test is satisfied? Answer is no. So more than 50% of the employees are also situated outside India. All the assets are situated outside India. Okay. And the third last condition which is there, which is saying ki the payroll expenditure on the Indian employees should be less than 50% of my total payroll expense. Now 3 crores I am paying to these 3 employees. Total payroll is 5 crores. So this is where I am failing. So the payroll expenditure in respect of this MD, CEO and sales head is exceeding 50% of the total payroll expenditure. So the fourth test is not getting satisfied. And therefore, we will say ACO is not engaged in the active business outside India. Are we clear? Yes, Kirti, right. So you need to satisfy all the 4 conditions to say that the active business is outside India. So these are the AND conditions. Are you getting this? So these are the AND conditions and not the OR. So you have to satisfy all the 4 conditions. Are we clear? Now what happens when the active business is outside India? So if you will ask the question whether company has satisfied the ABOI test. If the answer to this is yes, if the answer to this is yes, then poem shall be presumed to be outside India if majority of board meetings are held outside India. So, if my active business is outside India, meaning my passive income is less than 50% of total income, my assets in India are less than 50% of total assets, my my employees less than 50% are in India, the payroll expenditure on such employees less than 50% of total payroll, that means that I am having the assets, I am having the employees, the expenditure on those employees is everything outside India. Means the company is engaged in the active business outside India. Right? It doesn't have a passive income more than 50% of total income, meaning it's not a kind of company which is having some mobile income. Passive income is basically a mobile income which can be easily shifted. Right? So basically, the royalties, dividends, interest, all of these incomes can be easily shifted from one company to another company. It doesn't require any mobility of assets. शेयर्स क्या है, आप आज मेरे नाम पे, कल मैं आपके नाम पे कर दूं, राइट? So you can easily transfer these incomes. But if you are into having the active income more, you have more than 50% of the total income is active income, meaning you are into the active operations and you are not a tax avoidant entity. That is why that test is there. So if my active business is outside India, the poem shall be presumed. The CBDT is giving a presumption in your favor. It is saying we will presume that your poem is outside India, provided majority of your board meetings should be conducted outside India. So let's say if I have 5 board meetings held during the year, if 3 of the board meetings are held outside India, then we will say that the poem is outside India. If you satisfy the ABOI test. However, if it is observed that the de facto decision-making authority is not with the board of directors, but with the Indian parent company or a person who is resident in India, then that presumption will be revoked. Meaning, let's say for example, I have active business outside India. Majority of board meetings are also outside India. However, if it is observed that board is not exercising its decision, it is just ratifying the decisions taken by some other person. It can be an Indian company. I may be a subsidiary of Indian company. My board of directors are not taking the decision. They are just implementing the decisions taken by my Indian holding company or by a shareholder who is a resident in India. Then that presumption shall not be valid that we have given in your favor. Then we will consider the poem in India. As I said, this is a substance over form test, students. Right? You need to look who is actually taking the decision. Just because the legal wordings are saying that the board meetings, wherever they are conducted, we will presume that the poem will be outside India and majority of the board meetings are outside India. But who comes and sees the board meeting for a private company? ऐसे ही minutes बना दिए, right? We are expert at making, like minutes like this only. We will put into ChatGPT, make the minutes, draft the minutes for the board meeting conducted, and it will give us. Who is going to check that? We will look into the emails. We will look into the actual facts. See, emails can't lie. WhatsApp messages can't lie. How will you communicate to the other person that you have to, take these decisions for the company? Who is doing those decisions? If that are taken by the Indian parent company or the Indian shareholder, then the poem shall be considered in India. So just write here. If this de facto decision making is not with the board, but decisions are taken by Indian resident or Indian parent company, then OEM in India. Are we clear up till this point? Yes or no? Yes, is it clear?
Yes, ma'am.
Okay. Now, what if the active business outside India test is not satisfied? If the active business outside India test is not satisfied, then in that case, will this become an Indian company? The answer is no. Straight away, we will not say that this is an Indian company. So, here then we will see that where are the key decisions being taken up? Where are the key decisions being taken up? And who is making those decisions? So, you will check on two questions. One second, I think my PC has hung. Yeah. If this test is not satisfied, so you need to ask two questions. Where are the key decisions made and who is taking the key decisions? So where and so you need to identify the location where the decisions are being taken and then identify the person who are actually making the key management and commercial decisions. Again, this is a very subjective test as to where the decisions are taking, who is taking those decisions. So for that also the CBT gives some guidance. So CBT says that location where the board of directors meet and makes the decision, where the board meetings are taking place, that place may be the place of effective management, provided the board has the authority to govern the company. And in substance is also making the key management and commercial decisions. You know, it is very common these days that many Indian businesses are incorporating the companies outside India these days. And then what they do is they appoint some local director, some nominee director, they will appoint some, board, but that board will not have any power. That is just a nominee director. Or they will not even, have that kind of ability to decide for this kind of businesses. So in those cases, it's the Indian promoter, Indian holding company which is taking those decisions. So the poem will not be outside India, even if the board meetings are happening outside India. So the poem will be a place where the board meetings are conducted, provide the board of members have the authority to decide for the company. And in substance are making those decisions. Just formally holding the board meetings at a place would not be conclusive for determination of poem. If the key decisions are in fact taken by some directors at a place other than the place of holding the board meetings, that place then will be the poem. For example, let's say the board meetings are conducted in Singapore, where the head office of the company is located. Or let's say, for example, The board meetings are conducted in India. But that is not the place where the poem is if there are no key decisions being made in those board meetings. The place will be, the poem will be the location where the key decisions are in fact made. And that could be, let's say, the home of the director also. Are we getting this? If he's taking the decisions from his home, that may be the poem place. Or if the board does not have the authority itself to take the decision, but the board has delegated the authority to, let's say, some senior management or to any other shareholder or to a promoter or to some legal advisor, and the board is just implementing those decisions, then the place of poem will be, or the poem will be at a place where the senior manager or the financial advisor or legal advisor is taking the decision, or the shareholder is taking the decision. So you need to identify, as I said, that this is a substance over form test. Who is making the key management and control decision, and where are those decisions being taken? Whether it's the board who is taking the decision, whether it's the managing director or CEO or CFO is taking, or it is the legal advisor is taking, or some shareholder is taking, or there is some committee to which the delegation has been made to take those decisions. That will be the place where the poem is. Are we clear? Also, they say that the location of the head office will also be an important factor in determining the poem, because it often represents where the key decisions may be made. If the senior management and the staff are usually sitting at the head office, then that place we may consider it as a poem. Right? If that is the principal place of business. However, if the company is so decentralized that, some people are sitting in Europe, some people are sitting in Singapore. So then the head office will not be the place where the poem is. Then we will see where the senior management is sitting, where the board meetings are being conducted, where the usually senior management meet and decide for the policies. Because they may operate at a different location. Also, there's a possibility that they may, do the board meetings through the telephone or video conferencing rather than being physically present. Then in such a case, the head office would normally be the location where the highest level of the management is situated. Are we clear? In case we are unable to decide itself because the management is so scattered, some shareholders are in India, some are in Australia, then head office will not be a relevant thing. It will be then, if we will have to decide based on where the senior management who is taking the decisions are placed. Are we getting this? Because then the decisions are taken entirely virtually. So this is a very fact-specific exercise that we may have to do. We will have to review the minutes. We will have to review the emails. We will have to put the questionnaires to the company to understand who is making the decisions. Whether it is the directors, whether it is the shareholders. If the directors are making the decisions of the shareholders are not important. There are obviously, the shareholder approvals are required for taking the decision with respect to, let's say, merger, demerger, all of that under the company law. But those are not relevant because those are just routine approvals required. Right? Because the minority interest gets affected for the certain classes of shares, right? So these decisions are not kind of impacting the company because these are kind of the approvals which are just taken. However, where the decisions are such that, for example, dissolution, liquidation, which affect the existence of the company itself, right? So that may be important to decide where the poem is. Are we clear? Any questions so far? If it is seen that the board is not exercising the authority, but the shareholders are deciding, then yes, the shareholders' decisions may be considered for the purpose of determining the poem. Day-to-day decisions are not important, as I said. What is important is that what products we will have to sell, whether we have to discontinue a particular product, how do we price, which markets do we serve. These are the key decisions. Are we clear? So place where the main activity is carried out, those are the places we will have to keep into consideration. Just because an Indian company is holding a foreign company, that does not make the foreign company's poem in India. Unless we come to a conclusion that the Indian company is taking the key management and control decision. The fact that some of the directors are resident in India, again, this is not a conclusion to lead that the poem is in India. We have to demonstrate that yes, these are the only directors who are taking the key management and control decisions. Right? So, fact that some local employees are there, some local management is there, that will also not lead to the fact that the poem is in India. Or there are some support functions carried out in India, or there is a permanent establishment or a branch in India, that does not lead to the conclusion that the poem is in India. To establish the poem in India, we have to see whether there are any people who are taking the key management and commercial decisions for the company. If yes, only then the poem will be in India. Any question, any doubt? Yes, students?
Ma'am?
Yes.
In the module on page number 21.18, there is one point, point E, decision via circular resolution or round robin voting. Can you explain the wording round robin voting?
Yes. So, in the company law, I don't know if you have already done that as a part of, different way of doing the voting and in the company law. Like, I think that was part of maybe IPCC. There's a way of voting where, each voter gets, ranking on the base of scale. So, basically, it is a way where, in the resolutions, in the meeting, how do you count whether we have a consent or not. So this is a way of conducting a voting. So broadly, if I tell you that the resolution may be adopted by way of a vote, by showing having the poll by show of hands, or written robin resolutions, right? So written robin resolution is basically giving it on a scale. That is a written robin method. So round robin can be done, for example, by circulating the written resolution and then allowing them to be sent back so that the company assigns the weight onto that, or carries it out on a scale basically. So that is a round robin mode.
Yeah, ma'am, clear.
Okay, so it's like a rank choice ballot, and not just show of hand kind of system basically.
Yes.
Okay.
Yeah.
Yes. Any other question? It is preferable to mention CBDT circular details and answers like section numbers. For some CBDT circular, like for example this circular on poem, it is important, Kirti, to mention the circular number, because these are important circulars. Okay. Any other question? Okay. I see some questions. Okay. Fine. So, as I said, this is how the poem will be determined. Also, there is one more CBDT circular which says that the poem guidelines, or rather section 6.6, which is pertaining to the poem applicability, will not be applicable for a company which is having the turnover less than 50 crores rupees. So write down. Or poem itself not applicable to companies having turnover or the gross receipts less than 50 crores. So in those cases, the poem will not be applicable. Less than or equal to 50 crores. Are we clear? Also, when the assessing officer will say that you have a poem in India, for that purpose also there is a kind of check kept on the assessing officer so that he does not harasses each and every company. So in case the AO proposes to hold a foreign company as a resident in India on the basis of having the poem in India, then such a finding shall be given by the AO only after seeking the prior approval of a collegium, of a bench of 3 members, which consist of principal commissioners. So only when they have also approved that yes, this company seems to have a poem in India, only then the assessing officer can initiate the assessment. So there is a proper check kept so that the assessing officer does not abuse its power to hold that every company has a poem in it. Are we clear? Yes or no? Fine. This exclusion means that the company considered to be non-resident, yes. The small companies will be considered as the non-resident. Yes, you're right. Okay. Now, in respect of, see, when you have a poem in India, all right, now you will be considered as what? Indian resident. Now, once you are considered Indian resident, what will happen, students? Yes. What will happen?
Ma'am, all income will be chargeable to tax.
Correct. Your global income will become taxable in India. Right? So this will be causing the hardship to the taxpayers. And again, for that purpose, there is a transitional provisions which are notified. What are the transitional provisions which are notified? We'll have a look into it. So these transitional provisions ensure that there is a limited hardship caused to the companies whose poem is said to be situated in India. Okay, so let us look at these transitional provisions. I'm going back to the module itself. Yeah, these are contained under section 115 JH. Transition mechanism. So how do you first of all see when I say that the foreign company is now a resident in India? Obviously, on the income, on the business income, I will allow the depreciation on the assets, right? Will I compute the depreciation? Because till now, the value of the asset was as per the tax records of the other country. Now, I will not allow the depreciation on the book value from the year in which the asset was purchased, because the asset is already depreciated. That will not reflect the correct value. So if the foreign company is already assessed to tax in the foreign jurisdiction, right, then for the purposes of the depreciation, let me just expand it. Yeah, where the depreciation is now required to be considered for the purpose of computing the taxable income, we will take the WDV of the depreciable asset as per the tax record of the foreign country on the first day of the previous year as their opening WDV. So we'll take their WDV as a starting point. Where they do not have, let's say, they may not be filing the tax returns in that country. For example, UAE did not have a corporate income tax, or still even today in UAE free zones, we don't have the corporate income tax. So where the WDV is not available as per the tax record, or if the foreign company is not assessed to tax in the foreign jurisdiction. So if the WDV is not available as per the tax record, then the WDV shall be calculated assuming that the asset was utilized, installed, and the depreciation was actually allowed as per the law of that country. and that WDV we will consider. So we'll first allow the notional depreciation and depreciate the asset till today, and then we'll consider WDV. But if the foreign company is not assessed to tax in the jurisdiction, then we will take the value as per the books of accounts. Are we clear? Is this point clear? Yes? Now, what about the brought forward business loss and unabsorbed depreciation? See, till now the company was a non-resident. Now it is becoming a resident. So obviously we will have to allow them the past book losses or the unabsorbed depreciation. So again, if the foreign company is taxable in the other country, we will take the losses and unabsorbed depreciation as per the tax returns. But if the foreign company is never taxable in the other country, then we will take the book losses and the unabsorbed depreciation as per the books of accounts. However, understand here one point. Let us read what it says. Such brought forward loss and unabsorbed depreciation shall be deemed as loss and unabsorbed depreciation brought forward as on the first day of the previous year, and shall be allowed to be set off and carried forward in accordance with the provisions of the Income Tax Act for the remaining period calculated from the year in which they occurred for the first time, taking that year as the first year. So when you have the brought forward losses, unabsorbed depreciation is any which way is unlimited. There is no time limit to carry forward unabsorbed depreciation. But the brought forward losses, we can carry out in India, for example, business loss for 8 years. Capital losses for 8 years. Now, whether we will take 8 years from the first year in which you are becoming a resident? No. The notification says that the 8 years will be taken from the first year in which you incurred the loss, and for the balance years, we will allow this loss. Are we clear? Second point. The losses and the unabsorbed depreciation of the foreign company shall be allowed to be set off only against such income of the foreign company which has become chargeable to tax in India on account of it becoming resident in India due to the application of the OM. What does it mean? Let us understand. So, let's say, for example, this foreign company has income from, let's say, a branch in India. Let's say rupees 50 lakhs. It has other income in, let's say, country of incorporation. Let's say US. Let's say rupees 4 crores. It has the brought forward business loss of, let's say, rupees or let us make it like this. Let's not make it 50 lakh. Let us make it 6 crores. And there is brought forward business loss of, let's say, 5 crores. Now, what does this provision says? This provision says that these brought forward business losses will be set off only against such income which is taxable. So, brought forward business loss shall be set off only against such income which is taxable in India on account of company having OM in India. Tell me one thing. whether this 6 crores which is there was taxable in India, even if there is no poem in India, or whether the 6 crore will only be taxable only when there is poem in India. Are you getting my question? जो ये 6 crore है, whether it is taxability, whether its taxability is dependent on the companies having the poem in India or not?
मैम नहीं, क्योंकि वो अराइज इन इंडिया है.
Correct. So the 6 crore is any which ways arising or accruing in India, right? Or let me say deemed to accrue or arise in India, right? So for a non-resident, this income is any which way taxable, right? This would have been taxable even if there was no poem in India. Yes or no?
Yes, ma'am.
Right? So this is taxable even if no poem in India. So iske against, we will not allow the set-off of losses. So the loss shall only be set off against the income which is getting taxed in India, because now the company has become a resident of India on account of it having the poem in India. So this will be only set off against this. And 1 crore shall be carried forward for the remaining period. 1 crore will not be set off against 6 crore. Because the loss क्यों मिल रहा है आपको? Because you have become a resident now. So we are allowing your global losses also. So we will only allow against the income which we are taxing because you are a resident of India, not because you had already an income taxable in India. Are we clear? Yes or no? Did you understand, students, this point? Yes or no? Everybody clear about this? Yes?
मैम ये जो 4 करोड़ की इनकम है अदर इनकम, ये आपने सीओ यानी इनकॉर्पोरेशन इन यूएस ऐसा ही लिखा है ना यहाँ पे?
Yes, yes.
हाँ, तो ये फॉरेन की इनकम है?
Yes. This is earned in US.
यानी ब्रांच का लॉस फॉरेन, जो
ब्रांच का लॉस नहीं है, लॉस इज आल्सो ऑफ यूएस. दिस इज नॉट फॉरवर्ड बिजनेस लॉस ऑफ यूएस.
ओके ओके मैम.
ओके,
यस मैम.
everybody clear? Yes. Okay, let us go back.
मैम एक क्वेश्चन और था. इन द फर्स्ट पॉइंट डिटर्मिनेशन ऑफ ओपनिंग डब्ल्यूडीवी रिलेटेड, आपने कहा कि अगर कोई कंट्री ऐसी है जहां पर टैक्स एप्लीकेबल नहीं है ना, तो वहां पे हमारे पास डब्ल्यूडीवी नहीं होगी, तो हमको नोशनल यानी डब्ल्यूडीवी कैलकुलेट करना होगा.
नहीं, वी हैव टू टेक एज पर बुक्स ऑफ अकाउंट्स.
एज पर बुक्स ऑफ अकाउंट्स.
हाँ, ये अगर अवेलेबल नहीं है एज पर टैक्स रिकॉर्ड, लेट्स से फॉर एग्जांपल यू हैव नॉट फाइल्ड योर इनकम टैक्स रिटर्न, और लेट्स से यू आर नॉट taxable in that year, so you did not file the return, so then we will calculate a notional depreciation. But if you are not assessed to tax in the foreign jurisdiction, then we will take the book value.
ओके, एक्चुअली मैं वहां कंफ्यूज हो गई थी, यानी कि अगर टैक्स होगा नहीं तो फिर टैक्स रेट कहाँ से आएंगे, तो फिर यानी जो हमारा टैक्स रेट है वो करेंगे क्या इस तरीके?
नहीं, सी फॉर एग्जांपल यूएई में टैक्स है ही नहीं, तो फिर वहां पे यू विल टेक द बुक वैल्यू.
यस मैम, क्लियर.
ओके,
थैंक यू.
Now next is period of profit and loss account and balance sheet in cases where the accounting year of the foreign company does not end on 31st March. See, it's very important to prepare the balance sheet and P&L because we will then only know what are the expenses of the year or what are the incomes of the year, right? So in the other country, you may be following calendar year. For example, in Australia, we have July year ending. So how do we bring it to this particular company? Because the company is still incorporated there, so it will be reporting to their company law authorities as per their books of account calendar year ending. They will not be preparing for Indian tax purposes, right? Because they are not incorporated here. So they will still be required to report to their company law boards as per the calendar year or whatever the financial year they follow. So in that case, the foreign company will also be required to prepare the P&L and balance sheet for the period of 12 months beginning from the 1st April and ending on 31st March till the year the foreign company remains the resident in India on account of its FOIA. So if the accounting year of the foreign company is, let's say, a calendar year, and the company becomes the resident of India, let's say in previous year 24-25 for the first time, because it now has a poem in India, then the company is required to prepare the profit and loss account and balance sheet from 1st January 24 to 31st March 24. That will be 1 year. And also for the period April 24 to March 25. So it will have to break into two parts. Now, for the purpose of the carry forward of the business loss and unabsorbed depreciation, since the period from 1st January to 31st March is less than 6 months, the loss and the unabsorbed depreciation is to be included in the accounting year immediately preceding in the accounting year in which the foreign company is held to be resident for the first time. So basically what we will do is we will take the period from 1st January 24 to 31st March 25. So if the period is less than 6 months of the two accounting years, then we will club the two accounting years. But if the period is more than 6 months, then we will do it separately. For example, if you look at the example 2, if the accounting year of the foreign company is from 1st July to 30th June, and the company becomes resident in previous year 24-25, then the company is required to prepare the P&L and the balance sheet from 1st July 23 to 31st March 24, and then from 1st April 24 to 31st March 25. Now, in this case, both the period are more than 6 months, so therefore they will be treated as separate accounting year. Are we clear? Now, last one is applicability of the TDS provision. Now, under the TDS, if you have learned, right, we had only done the TDS chapter, right? I had told you there are certain sections in which the TDS is only applicable when the payee is a resident, right? And there is a specific section 195, which is applicable to the foreign company and to non-resident. So now this company becomes a resident. So whether we will have to deduct the TDS under 194J, 194C, all of those sections, or still we have to continue applying 195. So the notification says that there is a specific provision which is applicable for the non-resident and the foreign company. So that will prevail over the general provision, because the company, though it is becoming a resident company, but it is still not a domestic company, it's a foreign company. And 195 specifically applies to a foreign company. So the specific will prevail over the general. So we will continue applying 195 and not 194C or 194J or all of those sections which are only applicable to the resident. Are we clear? Yes or no? Yes? Yes or no? Is this clear?
Yes, ma'am.
Okay.
Yes, ma'am.
Now, what will be the tax rate which will be applicable to this company? Will it be 20, 25, all of those, or will it be still 40?
हम 40 होगा.
Correct. Because 22, 25, 15, 30, those are applicable to a domestic company. Right? For a foreign company, not 35, sorry, it's 35, not 40, it's now 35%. For a foreign company, there is a specific tax rate of 35%. As I said, this foreign company is becoming a resident in India, not a domestic company. This is still a foreign company resident in India on account of it having a poem. So the tax rate of domestic company can't apply to it. This is not a domestic company. So here it will be 35%. Are we clear, students? Yes or no?
Yes, ma'am.
Yes?
Yeah.
So any questions, any doubts that you have before we close the session?
Ma'am?
Yes.
Ma'am, I have little doubt about TDS not related to this chapter.
Yeah.
Ma'am, under section 194N, मैम आपने जो बताया था कि जहाँ पे वो 3 साल तक अपनी आईटीआर फाइल नहीं करता है पेई, मतलब जो रेसिपेंट है, तो उसके लिए जो निकालने वाला अगर कोऑपरेटिव सोसाइटी है, तो उसके लिए मैम जो लिमिट होती है वो 1 करोड़ से 3 करोड़ हो जाती है। मैम ये आपने शायद वैसे बताया था कि अगर जो पे कर रहा है वो बैंक या फिर कोऑपरेटिव सोसाइटी है, आपने एक चार्ट बनवाया था शायद, वो एक बार मैम आप दिखा सकते हैं?
Sure. This right?
N 194N.
Okay, हाँ, right. Yes.
Yes, मैम, ये आपने मैम बताया if cash withdrawal from bank or PO.
Yes.
और from cooperative bank.
Correct.
जो मैं समझ पा रहा हूँ बुक से, तो इसमें कहा है कि अगर रेसिपेंट जो है, रेसिपेंट अगर कोऑपरेटिव में सोसाइटी है, तो उसके लिए लिमिट 3 करोड़ होगी।
Yes, you're right. So there is an error here. Right, you're right. You're rightly pointed out. So here it should be if the withdrawal is by a cooperative society. This should be by a cooperative society and not cooperative bank.
और मैम रेट्स में भी थोड़ा बहुत एरर है।
रेट्स में क्या एरर है?
मैम इसमें लिखा है कि 1 करोड़ से ऊपर 5% है और 20 लाख से ऊपर 2% है 1 करोड़ तक, अगर वो बैंक अगर निकालने वाला अदर देन कोऑपरेटिव सोसाइटी है।
1 second. So you are saying bank, okay, 1 second. हाँ, deduction shall be 2% if the cash withdrawal is more than 20 lakh but does not exceed 1 crore.
जी मैम।
Right?
जी मैम।
So we have written, I think, the same only, na?
हाँ मैम।
2% if it is more than 1 crore and sorry, more than 20 lakh and less than 1 crore.
जी मैम।
So this should be more than 20 lakh and less than 1 crore, right?
जी मैम।
So this is changing, then it's 2%. Okay. And then if it is more than 1 crore, it should be 5%. Okay.
Yes, ma'am. एंड अगर ये कोऑपरेटिव सोसाइटी कर रहा है तो 3 करोड़ से ऊपर 5%।
Yeah, you are right. So this is 5% TDS. So students, please make a note of it. I think there's some error that I have committed while teaching this. And if you are saying it's a cooperative society, then it will be 3 crores and this should be 5%. You're right. Yes. So now it is right, right?
जी मैम, thank you ma'am.
Yeah, okay. So yes, students, just 1 second. If you can, look at it once again. It says that TDS on cash withdrawal. So where, for example, the person is a banking company or a cooperative bank or a post office who is paying for the cash withdrawal in excess of rupees 1 crore, then we have the TDS which is there, right? Now, in that case, what they try to say is that if the recipient has not filed the return of income, usually the TDS is 2% if the amount of withdrawal is more than 1 crore. That is right, right? So here, if the cash withdrawal is greater than rupees 1 crore, the TDS is 2%. However, if the account holder has not filed a return of income for all of the 3 assessment year, and in case there is the cash withdrawal exceeding 20 lakh but is less than 1 crore, then the TDS will be 2%, right? Then the TDS will be 2% if there is any recipient. If it is any recipient, not bank or PO, if it is any recipient, right? And if the cash withdrawal should be greater than rupees 20 lakh, less than rupees 1 crore. If the cash withdrawal is greater than 1 crore, then my TDS is 5%. And in case the withdrawal is by the cooperative society, right, then it will be considered as rupees 6. If the cash withdrawal is more than 3 crores, it is 5%, or rather it will be like this. If it is cooperative society, then if it is greater than rupees 20 lakh to rupees 3 crores, TDS will be 2%. And if it is more than rupees 3 crores, it will be 5%. Is it clear now?
Yes, ma'am.
Okay. So I think there was the small error. Thank you for highlighting, Ankit.
Welcome, ma'am.
Okay. So thank you so much, students. In case you have any questions, I'm happy to take. Otherwise, we can just close the session. Okay. So if there are no questions, thank you so much. Yes. Right.